Welcome back. John Payne and Naomi Bloom rejoining us. Naomi, we saw China come in, cancel more wheat buys. It seems like this is a trend here. But do you think that wheat sees pressure moving forward?
Feels like wheat has really kind of started to find some bottoming action. I feel like we've factored in the China cancellations right now, and the market is really more curious to see in the April USDA report where the global ending stocks are going to be at. We've been trending lower for smaller global carryout for months now, and that's what we're going to be watching going forward. We are growing wheat, of course, all over the world, but not enough wheat to meet demand. And the market's just really been ignoring it because it's more focused on Russia supplying cheap wheat to the world right now. So it feels, again, like a lot of that bearish mentality has been absorbed. We're trying to maybe finally find a low in that Chicago wheat market. And so far, feeling like the 550 area is going to be a good support base in general. Looking for at some point to see a price recovery bounce here. Probably just shorter term quiet action ahead of the quarterly stocks report next week. But bigger picture, it really feels like we're finally bottoming in the wheat prices in the wheat pit.
Well, John, let's switch gears a little bit to cotton because recent weekly sales numbers have been kind of disappointing, partly responsible for the recent sell off in the cotton market. Bulls this week were hoping for better numbers when it came to the export sales numbers. But, do you see opportunity in this cotton market, or is really there a demand problem there?
Well, I think we'll see more acres in the report next week. So that might not be a good thing for the December contract. I think you look at where the old crop is. Old crop has a lot more of a Chinese factor here, and the Chinese commodity markets have actually been on the bid for the last 3 or 4 weeks now. The Chinese stimulating their economy. I think you see that in the softs markets more than you see it in the CBOT right now. For whatever reason, the ICE contracts, which is where a lot of the softs are traded, I mean, we've been limit up for markets like cocoa, and cotton has done very well the last couple of weeks. And I think there's something there that with that emerging market exposure and the fact China wants prices to go up now, that cotton can perform a little bit better. As far as the U.S. goes, I think it's going to be difficult to grow our carryover too much in the short run, especially with higher acres. Because if the price does go up, I think you'll see those farmers in Texas, in Georgia, probably shift a little bit, at least on the margins.
All right, as these farmers weigh their acreage decisions, look to get in the field, some sooner, others a little bit later. But Naomi, what is your advice for farmers as they head into this planting season?
Well, stay abreast of market news first and foremost. The primary thing to be aware of is that I did a quick look at the past decade. July corn futures actually have a tendency to trade in a sideways range during the month of April, unless there's years of tight carryout. But that's not what we have right now. We've got 2 billion bushel carryout. And when you look back at the past decade, if that notion continues that the carryout is going to stay on the larger side, then that's really hard for the market to see a price rally during the month of April. Now, I don't think we're going to crash and burn. I feel like the worst is definitely behind us, but we need some really substantial news to get the market to rally. So be aware of those short term, quieter markets, especially if you're a person who's got corn in the bin that you're looking to price, because it might not have a lot of opportunity in the short term. We're going to need to see something bad happen with Brazil in order to get that market to spurt higher. I do feel like prices can work higher into the June timeframe, but again, just kind of quieter right now. So be aware of
Mhm.
that, especially if you're deciding if you should make those cash sales now or not. Some people have the time to move the grain now. So those are some factors to be considering.
Definitely. Thank you, Naomi. All right, John, real quick. Lean hog futures, they saw some pressure this week. Is it all about the skepticism about the longer term outlook for hogs, or really what's going on?
Well, we've seen the cutout markets really rally. So if you're into watching these markets, a contract that doesn't trade a lot but does have liquidity to a degree would be the summer and the fall cutout futures. So they're not really heavily traded by many people, but you can see those rally here. I mean, they have really priced in higher prices of meat. You've got cutout margins for packers pretty good here. So I don't think they're going to let the market for the summer get away from them too much. I think the longer run here is the Q3, Q4 markets for those futures contracts. They're cheap right now relative to historically where the cash would be. February is cheap, and I don't mean cheap like historically. I mean cheap just relative to where that index would be. So at this point, I think you've seen a lot of bull spreading, buying those front months, the summer, for example, selling the back. I could see an unwind at some point, probably later this summer. But I'm a little sheepish here to get too far ahead of the summer contracts, especially with the report here. If we'd have some sort of surprise that would show the the lack of desire of liquidation, or maybe we've over liquidated, something like that, I think the market could get excited, especially given where the cutout's trading.
John, Naomi, thank you so much. Naomi, good luck this weekend as you bury out from the snowstorm.
Thanks, Diane.
Be thinking of you. Not jealous of you, but I am thinking of you. All right, we need to take a quick break, and then we'll have much more right here on U.S. Farm Report.